What are some other metrics that we can use to manage and understand how prices are moving? Here we have something referred to as moving averages. So if you have data for maybe several years, you can use the average function and highlight, in the case of a 50-day moving average, highlight 50 days, and that will give you the average for that last 50 days. Then do each successive um, set of 50 to create a line. And again, here we say this is Disney. The 50-day average is the dotted line here. You can see it follows very closely. Disney is very erratic, right? Bounces all over the place from day to day. The 200-day, again, is then much smoother. So again, we want to use this 50-day, 200-day average to try to understand where we think prices are moving. We have several different types of graphs that we can use. There is a line graph, right? This really just reflects the closing price only. But we also have something referred to as bar graphs. This bar graph, as we see here, represents the entire day's range of pricing. It has the lowest price of the day, it has the highest price of the day, and this hash mark then represents the day's closing. Again, the wider this line, the longer this line up and down here reflects much more movement during the day. Now, candlestick graphs, they have high, low, opening, close price, right? And sometimes they are color coded, right? So if the price rose during the day, then it's green. If it declined, it's red. So again, there are several different prices. And again, what this allows us to do is just to understand the movement during the day of that particular uh, security that we're looking at. We can actually set this in bar charts or in charts in several different published information on the internet. We can do that in Yahoo Finance. You can choose which one of those categories you want. And again, you also can choose, do this in Morningstar Direct. You can do it in Zacks. There's actually a website called bigcharts.com where you can enter, in fact, all these things that we're talking about, you can request to see them in those databases. Again, we talk about our bar graphs. Here's another picture of a bar graph, how we can choose that. We can use this in Excel. So in Excel, you can choose stocks as your type of graph, and then you can choose the type of graph that you want to use. Now, of course, you have to have the data. So you have to download the data that would include the lowest price, the highest price, the adjusted price. All of those things then would be listed in our bar charts here. So again, what we're looking for here is to see how active the stock is during the day. And the bigger the change, if you look here, this long red line means what? That this day, this price dropped a lot, right? The others, the greens, these short greens means it went up, but it only went up a little bit that day. What we're ultimately looking for, and I will admit that I'm not very good at this, but what we're looking for is what they refer to as patterns, right? This is what they refer to as the head and shoulders pattern. Here's the left shoulder, here's the right shoulder, and here's the head. So a sell signal occurs when the price falls below the neckline after the right shoulder forms. So when you see this thing forming, here's the right shoulder, we need to have the neckline. Well, Again, as I mentioned earlier, I think that is the key to being successful here, is to identify the neckline, right? It looks like it's at this low point. I would think that would be more horizontal, but again, I didn't draw the line. But when it falls down, when it goes below this neckline, at this point, when it went below this line, that's the day we should have sold this. So again, they refer to this as a reversal pattern, meaning, it shows a change in trend for this particular security. Lots of different pricing patterns, right? Continuation patterns indicate the persistence of an existing trend. So here we have flags, we have pendants, we have rectangles and triangles. Again, you really have to research what these things tell and how to create the support and resistance lines to understand how you might use them. So what's the summary? Again, there are many, many patterns, right? There's entire books that have been written on charting. If charts are correct 2/3 of the time, chartists might be able to make money more often than not. Again, that's the big question. If they're correct, can we actually make money? Another thing that we're interested in looking at prices is interested in looking at volume. Volume talks about how many shares were traded on that day. If volume is low, that means shareholders or investors might be uncertain about the future direction. If the price is increasing and volume is increasing, right? Lots of people are buying, so the price is going up, then that is a bullish market is then confirmed. You say prices seem to be rising. If the price is decreasing and volume is increasing, right? Lots of trades are going on, but the price is going down. That must mean that investors think that the stock price is falling. The volume bars are at the bottom of these charts typically. So again, they identify here that there are 4 different trends that they identify here. Again, this is for Facebook. So we can see the way here's an upward trend, and then here all of a sudden there's a downward. So prices were going up. We should have sold here. The price went down. The price continues to go down. Now, when it got to this point, we should have been buying, right? So we have an upward trend, a divergence, right, going a different direction, a reversal warning, so it really went down, and then there was again this other downward trend. So again, how we use these things, and I apologize for not being an expert, but this is really an art and a science all to itself. So this combination can kind of indicate what the market psychology is going on. If there's a bear market and then the volume becomes heavy with small increases in price, right? So again, we're in a bear trend, we're going down, volume gets heavy and price goes up a little bit. This bear market is likely to reverse. If we're in a bull market and then volume gets heavy with a small decrease in price, again, this bull market is likely to reverse. Again, what they refer to this, they call this a blow off, right? So heavy volume with minimal price changes often indicates impending reversals. In bull markets, it could signal a downturn, while in bear markets, it could signal recovery. Again, a very complicated, artistic way of investing and understanding the markets. See you in the next video.